Hello, welcome to today's Experience Pod, where we focus on emerging technologies, trends, and their impact on business landscape in Nigeria and across Africa. Today we'll be discussing Kuda, disrupting banking in Africa. As we know, financial services helps companies, businesses, and individuals to achieve their financial goals. Unfortunately, financial services in Africa, particularly, has been plagued by barriers to entry, slow processes, and complex lending requirements, which creates a hurdle for customers. However, with the rise of fintechs, regulators, and incumbent financial institutions are under increasing pressure to respectively adjust regulations and make operations more user-friendly. Fintechs have a very significant role to play, but they are doing more than that. These startups are thinking digital. They're examining various internal and external processes that makes life difficult for customers and are leveraging technology. For fintechs, the customers comes first. Kuda is a key player to look out for in the African fintech space. Launched in 2019, this exclusively digital neobank has been a trailblazer in helping Africans get the best out of their money and live better lives. To add to this insight and conversation, we're joined by the co-founder of Kuda and, interestingly, our very own PwC alumnus, Babs Ogundeyi. Welcome, Babs. We're happy to have you here in our studio.
Good morning. Thank you, Kenneth. I'm happy to be here.
And my name is Kenneth Erikume. I'm a tax partner with PwC, and I'll be your host for today's session. Yeah, so I really know you, but for the benefit of our listeners, let's start with some background. For those who might not be familiar with you, Mr. Ogundeyi, what is your story and what inspired the creation of Kuda?
So thank you. I've always worked within financial services, and I spent a few years working in PricewaterhouseCoopers, and that really gave me a lot of insight into financial service sector. A lot of my clients were banks, and I think even at that time, this was a few years ago, it was clear that there was something fundamentally wrong with the way sort of financial services was offered to the masses. It really felt like it was a preservative of a niche audience, even though we have millions of people in Africa, but this product was being served to more sort of HNIs, government, big corporations, and I really felt strongly that there was a different way to offer financial service products to more people, and that's really sort of the fundamentals of Kuda and sort of how we conceptualized it, and kind of just started looking at the best way to make financial services reach as many people as possible, and that's the mission we're on. We're still on that journey right now.
Thank you very much for that, Babs. Now, speaking about reaching a large or wider audience, can you talk to us about your business model? We understand that you haven't really deviated from traditional model of banking and earning revenue from customer deposits, or making investments using customer deposits, and point of sale and loan fees and all those charges. But I understand that some of these things you're trying to eliminate some of those bank charges, and this is one of the things you're famously labeled as the bank of the free. So can you tell us a bit more about what this model is about and how it's disrupting the banking landscape?
Yeah, so I think I'll start for context. Kuda is a full-service, digital-only financial service provider. We believe financial services it's more than banking, but of course there's a huge element of of banking in everything finance. So the idea is for us, our mission is to provide financial services that is accessible, affordable, and quite frankly, should be rewarding as well. So the whole premise of what we do is based around those three key pillars. And, we really looked at sort of Africa as a continent. We looked at everybody and, starting with Nigeria, which is, for me, I would say I'm Nigerian, and I think it's probably the most important economy in Africa. Access to financial services is not great, but with the emergence of the mobile phone, it's a lot easier to to serve financial services to people wherever they are, and that's how we primarily tackle accessibility. And in terms of affordability, we wanted to eliminate fees, and we're still on a journey to do that. So primarily, you can interact with Kuda and use our services without paying anything. There are limits. It's not sort of free into perpetuity, but for the average person using it, it is a free offering. And that's how we tackle affordability. In terms of rewarding, we work very hard to make people understand their money better. And we do that via things like, super smart budgeting, categorization. So when you spend on the Kuda app, it will tell you what you're spending on. Maybe it's, entertainment, it's utility. So it really gives you, better perspective of where your money is going, without having to sort of crunch numbers into Excel and stuff like that. Now, it's now for us to sort of be able to communicate all of that to the customer. But more than that, we're not a charity, we are a business. So we need to find ways of monetizing these customers in a way that doesn't impact them financially in a significant way. So for example, we started issuing credit recently for an overdraft product. So we earn interest income on that. We earn money as a platform. As at today, we have over 3 million customers. Those 3 million customers do different things on the Kuda app. So effectively, we have the ability to become some kind of broker for other merchants, where we're able to sell their products. The easiest example to describe is, we basically sell airtime on behalf of, sort of telcos or whatnot, and we earn fees on that. So it's like a broker fee. So, eventually we see a world where, we have embedded lifestyle into the Kuda product, where, people need to spend money. They're going to spend it on something. They might as well spend it directly from the Kuda app. We just recently launched gift cards, which enables you to shop anywhere in the world. Again, it's not our product, but we're selling it on behalf of other merchants, and we earn fees on that. So, there are huge possibilities to monetize. And then also, this is not a single country play. It's not a Nigerian play. We are looking to expand into other jurisdictions. And again, that offers different opportunities from sort of a remittance perspective. So the fact is, if you have traffic and you have people interacting with money in some capacity, there are lots of avenues to monetize those things. And that's what, that's the journey that we're on at the moment.
Yeah, thank you very much, Babs, for that insight on how the model works. So your product manager actually mentioned that the average Kuda user is between 18 and 25 years old. Was acquiring this group an intentional move by you, or did that happen? Did it just happen because? When I look at that demographic, it seems to be like the often neglected bit from a financial services perspective. So, can you give us some perspectives about that?
Yeah, I strongly believe, what we're doing is a marathon rather than a sprint. So, you know, we've intentionally targeted the emerging generation, you know, the future of, you know, a society, and that's sort of, you know, the young people, and it's an opportunity to win trust early. A lot of people say banking is like a marriage, like it's hard to just, you know, get out of it, but which kind of makes sense to target younger people, you know, so it's like, you know, before they get married, we're the ones that, you know, but yeah, it's and if you look at the population, you know, across Africa, you know, I think 70% of the African population is under the age of 30. So that's like, you know, really sort of the heartbeat of, you know, of the whole entire continent. So, you know, and those are the people that we can help shape and build the future with. You know, this is a new concept. A lot of older folks are probably, I would say, sort of more set in their ways, and it's a lot harder to convert and convince. But the younger generation are typically more adventurous. They're digital natives. They're already used to operating digital financial products. In fact, they're used to living their lives digitally in everything that they do. So it makes a lot of sense to target that segment and grow with them, and, you know, because that is the future. So at the moment, I think, you know, if we build the best digital bank in society, I think in a few years that will become the best bank, period. You know, not just the best digital bank, because it's, you know, that's where the world is moving towards. So it's those that can prepare for it now that will take advantage of sort of the next few years.
Thanks, Babs. Just for our listeners, just to give them some interesting bit of discovery I got. I went on Snapchat recently and I saw a Kuda filter, which was quite cool with the sunshades and everything. Well, you know, not for people as old as me, but it appeals to younger people, I'm sure. Anyway, so let's talk about, you know, first of all, maybe I should say congratulations on closing of your $55 million Series B funding round. I think that's, you know, massive by any stretch of the imagination. We understand that you're planning to use this to fund and build new services for Nigeria, as well as prepare for a continental expansion. What does this expansion look like for a digital financial services business like Kuda? And what new products and services can we expect?
Yeah, so the way I look at it is, you know, the heartbeat, or sort of the engine room, is the technology. So I think a lot of what is happening today, a few years ago, was probably not possible. But because of technology, you know, I think companies are able to move a lot faster and move a lot further as well. So, you know, with Kuda, we have our own core banking that we've built in-house. And what that means is, once we have some kind of regulatory approval in any jurisdiction, we can easily plug into that same engine and, you know, leverage on sort of the data that we have, and pretty much use sort of very similar marketing strategy. It's the same brand, and, you know, we'll be able to sort of turn the engines on relatively quickly. So that's kind of sort of the approach for expansion. In terms of services or products, you know, we're coming up with sort of more sort of alternative financial products. It's really all about, you know, how do we democratize financial services? How do we sort of, you know, I think in Africa you have to sachetize things, you know, and I think the FMCGs have done that very, very well. But it's been a little bit harder to do it within financial services. But, you know, I think the success of, you know, companies like Kuda is that ability to really serve financial service products in small bites, so that more people can take advantage of it. So you have things like, I think when we started, the main thing was transfers. It was a lot harder to sort of transfer small amounts of money just because of the cost of it. It just doesn't make sense. But if you're transferring for free, then it increases the ability of more people to actually participate in that particular function. And it's the same ideology we would use for any other products, be it like investments. You can imagine a world where we're able to serve sort of like fractional share purchases, for example. Typically it's a world where it's more affluent people would participate in it because of the fees and whatnot. So, but if you satirize it, you just open it up to more people. So we're going to be doing a lot of products like that. So any kind of financial service product you can think of, it will be bite-sized and sort of made available to as many people as possible. And then, as I mentioned earlier on, the more people interact with money, the more we understand what they're doing with their money, the more we can sort of start adding, more lifestyle things and just kind of do more embedded finance and embedded lifestyle, and make it easy for people to just, purchase things without necessarily having to look for it all over the shop. And those are the, so that's the main thing we're doing. It all sounds very simplistic, but but that's the idea, is to make it as simple as possible. But there's a lot happening sort of under the bonnet. But yeah, that's pretty much it.
Yeah, trust me, I understand the complexity required to make things come across as simple. It's a significant talent, I think. Slow onboarding is one of the pains I've got, even as this is me discussing as a customer of financial services. The process of filling those forms, the verifications, and then someone tells you, oh, you didn't put in this information, so it's a pain. What traditional banks have done, or financial services institutions, is they get an account manager who helps you with the bits and pieces of filling those forms. But I think with emerging technology, things can be done in that space. And one of the things you're known for is the seamless and fast onboarding onto your platform. Can you, walk us through how you've managed to significantly reduce the KYC process while still retaining security and mitigating risks?
Yeah, there are generally three things I think you look at when you want to onboard a customer. Because you're in a regulated environment, you have to understand sort of the statutory requirements, that you have to go through from a KYC perspective. And then you sort of also have to look at areas not necessarily covered by regulation, but just sort of that could be risky, because obviously you don't want the wrong people coming into your system. It's more trouble than than you want. And then the third is the convenience for the customer. You always have to look at everything from the customer's perspective, and really, if you do that and just sort of treat the customer as king or queen, you sort of will be able to build around sort of the complexities and make it easy for the customer. And it's not like, Kuda is just sort of is the genius that's found this magic, but it's the way the world has moved. Now, there are companies that offer sort of KYC functionalities, and as we're an API cloud-driven organization. So the idea is what's the fastest way to get that information that you need to sort of tick the KYC box, and to be able to assess risk, but at the same time be able to offer the customer the most seamless of experiences. You can't necessarily do everything by yourself. You have to be able to rely on others, and that's where the APIs come in. We're able to sort of tap into, at least in Nigeria, we're able to tap into sort of government issued identity sort of activities like driver's license, international passport, the national identity management card system. So a lot of work has already been done by somebody else. You just need to tap into that and get that information, and then we corroborate it to whatever the customer has supplied to us, and it's just about breaking down the whole process to make it comfortable for the customer. Not too much text, because again, a lot of times we don't really read these things. You have like thick folders and you have to fill so many things. It's discouraging. So it's really about really thinking about the customer, being creative around that. And at the end of the day, we're all trying to get the same information. It's just like, what's the shortest way I can get that piece of information? And that's why I think it also contributes to sort of the fast growth as well. It is relatively easy to open an account and sort of, from wherever you are. You don't have to, you make it so clear and understandable for consumers. They will interact with it and they will use it. And yeah, that's pretty much that. But again, it is one of the biggest sort of areas where we spend a lot of hours just fine tuning, like continuously. It never stops. But it's a very important part of the whole process.
Thanks. And with the way the world is going, I think that obviously makes sense, especially with the digital trend. And we see that unlike traditional financial services, we're not seeing that brick and mortar structure everywhere. And we also expect that if people are doing things online, it's a no-brainer that would also save us on trees, cutting down trees and the paper and things like that. So being purely digital might have more sustainable operations than traditional banks. Is ESG a current focus point for you? Are there any green initiatives we can expect to see?
So I think you already kind of touched on it. I think Kuda is inherently a green compliant organization. The fact that we literally, do things purely online, digitally, we're already cutting out a lot of those things that would sort of contribute to non-green initiatives. As you mentioned, like we try not to use paper. We don't have a lot of, in terms of distribution, we don't have sort of the brick and mortar, the generators, the diesel. We don't have, or we minimize those things. And even sort of just generally the way we work, we've started doing quite a lot of remote working, not just in Nigeria. We have teams spread around all over the world. So you can expand workforce without sort of contributing to sort of more pollution and whatnot. So it's not something that is currently at the forefront of of our thinking, but just because the way we are set up, we are inherently compliant to a large extent. But of course, over time, it's an area that we need to look at more deeply and be more intentional about, and see how we can really contribute to sort of making the world a cleaner, more responsible and sustainable place for all of us to live in.
Thanks for that. There's one question that has been on my mind when you spoke about, um, you know, your overdrafts, and how you're now, granting that product to your customers. But I also understand that the default rate is also very minimal, right? You know, I often wonder how people are able to achieve that, considering, when you're looking at that demographic of people you're trying to bring in, from a financial inclusion perspective. Sometimes the data, with that group is not, so readily available. And that's why the traditional financial institutions sometimes avoid playing in that space. So what are how do you achieve this? And, what's the place of data and analytics in terms of credit rating and analysis for those you grant the overdraft?
Yeah, I think first a bit of a caveat. I think minimal default rate is relative. It's relative to obviously like interest you charge and whatnot.
Yeah.
But yeah, it's I think it's a process, right? So we build a relationship with you first. So before Kuda could give you any form of credit, you have to be a Kuda customer. Kuda has to understand you, understand your behavior, your spending patterns, and over time, we've been able to build a scorecard, which is still, in development. Again, this is one of the things that continues to change and evolve. But generally, it's finance it's a relationship thing. I'm probably more likely to, as an individual, I'm probably more likely to sort of give a friend a loan, but I will give what I think that friend can repay, not necessarily what that friend asks me for. So it's the same sort of mindset that we apply to our customers. Based on our understanding of that customer, and which the primary information we have is their interaction with the Kuda app. If they have a savings product, for example, if they're doing a savings activity, it's how disciplined are they with that savings activity. If they're disciplined with that, then there's a high probability that they'll be disciplined with sort of repaying a credit facility. So we do plot a lot of data points. I think over time we will be able to get even sort of more external data. We do have access to some, but I think what will make the scorecard sort of even better is having access to even more information. And it is out there. It's just how you sort of pull them in and articulate them in a way that it's easy to understand, and then be able to use that to grant some form of credit to customers. So yeah, it's not an easy thing to do, but it is possible. But again, this is why sort of not everybody does it. But I strongly believe that it's an area that can be key for a company like ours, sort of in the future. And so far, so good. We're still early in that, but I think it started off reasonably well.
Yeah. Let me just latch onto that comment around connections, and access to the information. It's out there. So interconnectivity or interconnectedness is the word of the day, essentially. Internet of Things, exchanging data, different devices. Those are foundational elements of building sustainable technology structures. And this is also important for open banking, which enables third-party access to financial data in order to give customers more tailored products. How has integration and data exchange played out in Kuda so far, and what emerging tech are you leveraging to harness and maximize the use of data?
Yeah, so we have a whole data science team, and primarily their job is to gather as much data as possible and sort of mine it in a way that it's easy for us to use, the interpreted for the whole organization, not just from a credit perspective, but just from a decisioning perspective, in terms of what products we can offer. But honestly, I think there's still some way to go in terms of sort of working with others and working with sort of third parties in having a more robust sort of data decisioning environment. And I think we'll get there. There is push for open banking. It hasn't been embraced fully, but over time, I have some optimism that that will change. And once that's done, I think it becomes easier for everybody. Because as I said, the data is available. It's just the ease to access it that is the challenge. So there are some players that are I guess to put in really simple terms, willing to share information and to share data, obviously with the customer's consent. With those partners, it's made it somewhat, I guess, easier to sort of add to whatever information that we have internally. But you talked about integration. I think technology generally, and especially fintech, a lot of it boils down to integrations and sort of speed of integration, and choosing sort of the right partners to integrate with, because effectively you are sort of relying on others for certain things, and the more we collaborate as a sector, I'm talking about finance sector generally, I think the better products we're able to serve to the customers and actually increase market share generally for everybody. This is not like a one company or one sort of category set of companies that would fix sort of finance and make finance more inclusive or whatnot. It's really a collective effort of everybody, including regulators, who, I think Nigerian regulators have done quite well in sort of making the environment sort of conducive. And it is a challenge even for them, because obviously the primary focus is to protect consumers. So balancing that is very difficult. But I think if everybody is more open to working together and being collaborative, I think we'll be able to build much better products for the end user. And I'm optimistic that that will happen more and more over the years.
Thanks a lot, Babs, for that insightful perspective you've provided to us on Kuda, as well as fintechs generally. So I must say that from PwC's perspective, we're proud of you. From time to time in conversations, I drop your name and say, oh, I know Babs. So this is really interesting to have you in our studio. But before we let you go, I have a few questions. The first one is, speaking of predictions, what was the last prediction you got wrong? Don't tell me Arsenal or something.
I try not to do that. I try not to predict, because obviously things are not always within my control. But I'm not sure. I can't really think. I don't make a habit of predicting things, to be honest. So I'll probably just pass on that question.
Yeah, that's fine. That's okay. Next question I have is, what's one view you seem to find very few people agree on? That could be anything.
That
few people agree on. Maybe
Uh,
politics.
yeah, I mean, yeah, I would probably just have to say something like, I'm a big Liverpool supporter, and I think they're like definitely the best team in sort of like
Okay, let me
in
just
the
say I
world.
don't agree.
But yeah, no one seems to agree with me. But the stats are there. They're like probably the best team in the world at the moment, I think, and definitely the most successful English club. But yeah,
Yeah, I wouldn't agree with you. Otherwise, my Chelsea fans would come knocking on my door after this program. So there's something the last person that we interviewed on the podcast asked us to ask the next person we're interviewing, and that's intra-African trade. How do you see this succeeding with present regional blocks like ECOWAS, SADC in Africa, maybe the Africa Continental Free Trade Agreement?
So I think, there's some things that is difficult to block. You can make it difficult, but you can't eliminate it. And I think, Africa trade is one of those. People will trade, no matter, what obstacles that you put in the way. So I think for that singular reason, I see eventually there will be success. I think more people will come to the table because, again, it's going to happen. It is happening already. It will keep happening. So the more and the quicker we plug into that, and sort of the powers that be see that and plug into that, I think the better it will be for all parties, because there is a lot to gain. So, and I think if you look at sort of financial services specifically, there are moves to make that more possible. Sort of, I think there's currently a switch being built to connect, the sort of the whole of Africa ultimately. So I think there are moves to facilitate like easier trade, but yeah, it's going to take a bit of time for us to get there. But I believe ultimately there will be success. It's just when, and I'm not going to predict that.
All right, nice. You could have predicted whether Liverpool would win the Champions League, but maybe the final question for you. So disruption is interrelated, obviously. So we expect that you would ask the next person to be on this podcast a question. Mm-hmm. So what's one perspective you'd like to get from our next interviewee?
Okay. So I think we should ask the next person if they use a digital financial product. And if the answer is no, I actually want to know sort of the reason for that. Okay. Because I think for me that's quite important, just because, in terms of value, it seems like a no-brainer. So, like go back to Kuda, we have 3 million customers. I'm like, why don't we have 30 million customers already? Because it's, clearly it's free, it's easy,
Mm-hmm.
So, clearly there is still some reservations there somewhere. So yeah, so my question would be, do they have a digital financial service product that they use, sort of as a primary product? And if it's no, why? If it's yes, I hope it's Kuda.
Thank you very much, Babs. Interesting one, and definitely would like to have you again. So thanks for coming.
Thanks for having me.
Cheers.